Uh, Hello, good afternoon, and good evening. Welcome back to the Four Direction. Today is September the 6th, 2020, and it's a special edition of one of the topic that we are going to talk about financial literacy, uh, the challenges and the opportunities that to have to risk and manage your finance and your money when it comes to currency, when it comes to how you sustain your future in terms of finance. It's one of the most important topics. So, for the audience who are watching, please kindly subscribe to the page, share the Facebook live with your friends so that they can also benefit from the topic, and send us your questions. Send us your opinion. What do you think that you can sustain your finance situation, and what are the challenges that you are facing? Uh, Finance is one of the most important topic that is handling us back from achieving our goals in general. And a lot of us are not aware of the rights, of our financial rights, and how we spend money in terms how you can do the saving, how you can buy things, and also how you can have saving for your future. And there is also financial rights, some of these rights that you have in the country where you base and where you live, and especially for those who are based in the developing countries, either you live in the United States or in the diaspora, also for the African communities. There is some rights that this state provide for people, and many of us who have question and concern, our guest today is going to answer to this question. I have Nany Condoe. She's a special she's a physician by profession, but she's a finance also assistant, finance profession, and she was a physician assistant. Welcome, Nani.
Hi, Mary. Thank you for having me.
Yeah, thank you for making your time today to come and share experience with us in finance.
Sure.
So, just first, let me start by asking you. You were in the medical field as a physician assistant, and what bring you to the finance sector?
Well, that's a great question. I'm actually still in the medical field. I'm still practicing as a physician assistant in the emergency department. And actually, I think that is my medical background is the reason why I started a career in the financial background.
Mhm.
I've been in the medical profession for about 16 years now. And I always get to see the aftermath, right? People are coming in with financial stress that is causing so many medical issues. People's blood pressures are so high, they're having strokes and heart attacks. And the moment you start talking to them, you start to see that many of their concerns, things that are really adding to their worries, is financially related. So then I a few years ago was talking to a colleague about my own finances and just being frustrated about, you see the money, and then in December they give you the W-2 form and you see how much you made, but you're like, where did the money go?
Mhm.
And she referred me to a financial literacy workshop, financial literacy campaign, and I started going to the workshops and educating myself, and I realized that that's the problem. Once we learn how to manage our finances, we reduce our financial stress, and we can really have better health by having better finances. And that's where my passion took off. And now I get to at least prevent people from the medical issues that are financially related, by helping them plan ahead of time with things that can reduce their stress, and also different accounts and portfolios that can open that can really take care of them. So yeah, my medical career led me to the financial career because I know that there's a need for financial education
Mhm.
on many aspects. And taking care of our health is one of those. Financial education would definitely make our lives better in many ways.
Mhm. So exactly when you talk about finance, what do you mean by that? Is it the money that the person make out of their job income, or if they have businesses?
Right. So, contrary to what many people believe, when you talk about financial education or finance, people automatically think cash, right?
Mm-hmm.
But it's a mindset. It
Mm-hmm.
really is building wealth is a mindset. We've seen a lot of people who are, I guess, quote unquote rich. They have a lot of money, but then they lose it all. So if you don't have the mindset of having wealth, building wealth, it doesn't matter how much money you have, you're gonna lose it all.
Mm-hmm.
So when I talk about finance, financial education, I'm talking about really knowing how money works. What are areas that you can put your money to build wealth? It's not just necessarily going to work, making, working overtime and making extra cash and just having the cash, or starting a business and just making the cash, but knowing how to build wealth, understanding the financial concepts, here in the United States, around the world. What can make you, grow your $100 into 1,000, into 100,000? What are the ways or habits that you can have to create generational wealth for yourself? So it's not just about chasing the dollar, but building wealth.
Mm-hmm. So when you talk about wealth, what is wealth mean?
Wealth is basically wealth is having building something that is generational, something that you can leave behind, not just you, right? I can be rich and
Mm-hmm.
have $1 million or 2 million or three or multi-millions and blow it all. But if I build wealth in real estate investments,
Mm-hmm.
in different investments, having generational means, right, for my generations.
Mm-hmm.
That to me is wealth. Having my children go through college, and by the time they're my age, they don't have to worry about money. They don't have to worry about getting 2 3 jobs. That for me is building wealth. My grandkids
Mm-hmm.
growing up and not having to worry about student loans, or 2 3 jobs, or working for somebody else. To me, that's building wealth, right?
Mm-hmm.
That's generational wealth. I don't want to be just rich. I want to be wealthy.
Mm-hmm.
um,
How can someone be wealthy?
how can someone be wealthy? Really, by changing their mindset,
Mm-hmm.
right, about money, by starting early. Small changes make a big difference, right?
Mm-hmm.
If I'm in my 20s and 30s now, a lot of the wealthy people that we see, they're not just blowing their money on expensive things, or, impressing people, cars, and stuff like that. These people are investing their money in the stock market, in real estate, in things that are making money for you, right? In order, really, the best way to build wealth is to have people working for you, setting up a business, something that is independent from you, right? For example, the owner of Amazon or Uber or McDonald's, these people created a platform where other people are working for them. So whether they go to work or not, money is being made for them, right? So that's how you really build wealth. And then having money work for you. The best thing you can have work for you is money, right? If you have investments and different things and it's just working for you, then that's really how you build wealth. You going to work every day and struggling to make ends meet is not necessarily the way you build wealth, but by having a business structure, creating investment portfolios that are making money for you, really is what we're talking about.
Mm-hmm. So for people who doesn't have experience of how they can build up their business or how they can put up a plan together, how can they find out about that?
Okay. So, I mean, there are so many different things people can do. For one, I'm in the school of thought that you shouldn't really invest a lot at the beginning, right? When you're starting a business or you're trying to find out what you need to do, you don't want to lose everything that you have already. So, there are many, many ways people can start a business, but start small, do your research, right? And then businesses that are usually, in my opinion, easier to start are where you're using your mind, your brain, right? You got to maybe take an exam, do something that you don't have to put a lot of capital up front, right? If I only have 10,000 in my savings and I need to put 5,000 in my business, I'm not saying that's wrong. It takes money to make money, but at the beginning, you really want to invest in businesses that you can afford, that if you lose it, it's not going to create too much financial stress for you. And there are so many different things people can do. You can get an extra license or certification and start a business that way. You can join another business that's already going. So there are different types, and really knowing your personality and your passion as well. I believe that you do well in things that you're passionate about. You know, if you don't like something, no matter how much money you can potentially make there, it may not work. So um, those things are really, I think, doing more research and seeing things that fit you well. But there's a lot of business opportunities out there that I highly recommend people look into, because your 9 to 5 is not likely to build your wealth, right? You have to do something else that would create that um, opportunity for either other people to make money for your business, or for you to have enough money to invest and let that money make money for you.
So what are the some of the mistakes that people make when it comes to money?
Some of the mistakes that people make when it comes to money, some of the things that I have actually noticed in our diaspora, right? I'm from Guinea, I'm African. A lot of us are not thinking long term. You know, most people are not thinking long term, they're thinking only today. So you have money today, you buy the biggest house you can get, the nice cars, you know, and nothing is wrong with that. However, we have to learn how to build a strong financial foundation. And I think many of us are not doing that. To build a strong financial foundation, there are actually 4 concepts that you have to really understand and build up on that. And you do it one after the other, or you can do them together. And these 4 concepts are: number one, protection; number two, debt management; number three, emergency fund; and number four, investments. Protection. Why is protection important? I can have 100,000 or whatever sitting in my account right now in savings, but then if I get sick or something happens, I can't go to work, my income stops. I'll start taking out money from my savings account, right, to
Mhm.
take care of myself and finish the money that I saved. Or if I die, that $100, 100,000 may not be enough to take care of my kids or my family, the responsibilities that I have. Or if I get sick and I need to spend on my health insurance or my medical bills. It doesn't matter how much money I have saved. A lot of time, if I'm only taking away from that money, I'm gonna run out. So that's why it's important to invest in protection, life insurance, health insurance, disability insurances. That way, if something happens, the foundation is covered, the basic needs are covered. Okay.
Mhm.
Then you go on to debt management. If you have a lot of debt, that's another mistake that a lot of people make. You take debts that have high interest rates.
Mhm.
So you're making somebody else rich. There's a concept called the rule of 72, which is whatever you owe, they divide by 72. I'm sorry, if you divide 72 by the interest rate that they're giving you, that's how long it will take to double what you owe. So, for example, if I have a credit card that is 18%,
Mhm.
and I'm sorry, if I divide 72 by 4, every 4 years, I'm doubling how much I owe that person. Or if I have money in an investment account where I'm getting 8%, divide
Mhm.
72 by that, every 9 years, I'm doubling my money. So understanding compound interest, you realize that, if you have a lot of debt and you use credit cards, you're
Mhm.
paying so much in interest. That's one of the big mistakes that people are making, and the money just keeps adding and adding, and they're not paying it off. They're only paying the minimum balances.
Okay, because I don't know, when you talk about the access to credit card and all these services, this is available for the people who are in diaspora, and also the health and wealth insurance. Just talk to me briefly about what does that mean? What is the health and wealth insurance and the life insurance mean?
Okay,
And
sure.
how? how you are helping people to understand about that.
Yes, absolutely. So there are, you have insurance, you have life insurance,
Mm.
and life insurance is generally covering you if something happens to you and you pass away. A lot of people traditionally, that's all they think life insurance is. When you die, your family gets the money. But life insurance actually does a lot more. Nowadays, there are life insurance policies that have living benefits. So let's say if I'm sick, I have a stroke or heart attack or cancer and stuff like that, I can actually get my money from my life insurance policy to take care of myself, to pay my bills, to pay things that I need to take care of. So it's not just before I die, right? Then there's also life insurance policies that come with long-term care. So long-term care means if you need help with two or more activities of daily living, like eating, bathing yourself, transferring, and different things like that. There are 5 activities of daily living. If you can do two or more of that for yourself, and that could be me getting into a really bad car accident, for example, God forbid. But these things happen. You don't have to be old or young. Things happen in the world. So most of the time when people don't have these policies, Medicaid, the government will help take care of you. However, for the government to take care of you, especially in the state of Maryland, I'm from Maryland, you need to have less than 2,000 to your name. So that means if you have any investments or anything like that, you need to finish all of that before they take care of
Do
you.
that money have to be in my account, or how can I pay it?
What money?
The 2,500 to get the Medicaid
Oh, no, no, no,
insurance.
no. So no, I'm saying, so the Medicaid, that's what you have to have in your name for you to qualify. So basically, you need to have nothing in
Mm-hmm.
order to qualify. So the Medicaid, the government would take care of you that way for free if you don't have anything, right? But for example, if I take myself, I mean, I don't want to depend on the government. That's not the way I want to do it. So it's always better for people to think about their own policies, your own long-term care policy, your own life insurance policy, because you have more control over that, and you can also live a good life. You don't want to not work or build wealth for yourself just because you want the government to take care of you, right? So to get life insurance policies nowadays, it's very easy. Even people with medical issues can qualify. I work with many different companies. So basically, apply for the application, put in some, risk assessment information that they ask, and then sometimes you have to do blood work. Sometimes you don't have to do blood work, and then you get life insurance that way. Health insurance is basically insurance that takes care of you when you know you're sick, right? You have a copay, the insurance company pays part of your medical bill. Again, people that are very, very poor, having less than 2,000 to their name, not working, the government will help you get Medicaid. That will help cover some of your medical expenses. But again, a lot of people who don't qualify for that need to have their own health insurance. uh, if you're working, you're healthy, you have means to take care of yourself, having your own is always better than depending on the government. So then we either help, if you can afford it, help with Medicaid so you can have that. If you can afford it, because there are a lot of restrictions. When Medicaid, the government takes care of you, there's a lot of restrictions on that. So then, if you can afford it, then we help you get health insurance through different companies. Again, I work with multiple companies, so I don't want to put any names out there. But for anybody who is interested, I can definitely, you can reach out to me and I can help you with that. There are also disability insurances, and so on. But it's definitely the first step in building a strong financial foundation. I've seen many people who have good jobs, they're working, something happens, and it's a catastrophe because they can't afford to take care of themselves, or the breadwinner, the dad or the mom dies, and then the children are suffering.
Mhm. So how do you help people basically? Like if there is someone who need help with their finance, how they reach out to you, and what is the process and the procedure that you follow up with?
Absolutely. So the first thing that I do is with everyone is to do a personal financial strategy. Coming from my background in medicine, when someone comes to me in the ER and you tell me, hey, my belly hurts. First, I'm going to ask you, when did it start, right? What part of your belly is hurting? And then I'll examine you and see where it is, and then decide which labs, blood work, or imaging I need to do, and then diagnose, right? Then eventually prescribe. Same thing with finances. My approach is we sit down, do a personal financial strategy, see where you are and where you need to be, right? And on that personal financial strategy, we see what is your income. What are your expenses? Do you have any discretionary spending at the end of the month? Meaning, is there a surplus? Do you have money extra after you pay your bills, or is it a minus? If it's a minus, then I'll work with you with your expenses. Obviously, if you have a minus at the end of the month, that means that your expenses are a lot more than what you make, right? So we work on increasing your cash flow. Work on dissecting your bills. Maybe you're paying too much for certain things that you can cut back on, right? So then that's maybe you have too much debt. Then we do a debt roll up and try to see help you manage your debt. If it's something that is so huge, then we start working with some other credit counseling departments that can help you maybe negotiate some of the debts and take them off your credit and so on. So that's the first step, right? And then finding out what are your goals.
Is it
What do
the
you?
form?
I'm sorry.
Do you work with the form, or
Yes.
how do you
Yeah.
fill that?
Yeah. Exactly. This is a form that we go through. So after we, see how much you make, what are your expenses. If you have a surplus, right? Maybe after at the end of every month, instead of a minus, you have $100 extra, $2,000 extra. Then we see what you can do with those 2,000, right? Or that $100 or whatever you have extra. Then what are your goals? Is your goal to go back to school? Is your goal to buy a house? Is your goal retirement? Do you want to plan for retirement? Do you want to travel? What are your goals? Then, based on your goals, we then start putting money aside a little bit every month in different accounts to reach that goal. So by doing that personal financial strategy, it really gives me a better idea of who I'm dealing with, right? We also work on that form. We get to see your assets and your liabilities, right? So knowing if you have too much liabilities, then you need to cut back on that before we make any major financial plans, because it could hinder, certain things that you're trying to do. Then we calculate your insurable need. Again, and they'll calculate your insurable need and your retirement need. Many people don't have the opportunity to know exactly how much they need for retirement and how much they need for insurance. There's no magic number, right? My insurable need is different than your insurable need. How do you calculate how much you need? There are four factors. You calculate your debts, your income, your mortgage balance, education for your kids. Then also for your retirement, ideally, you should have 20 times your income before you retire. Meaning, if I want to retire at 65, I need to make sure that by 65, I save 20 times whatever I make annually, because I can live easily from 65 to 85, right? People are living much longer. The oldest person I've met personally was 108 years old at the
Mm.
emergency room, right? So at least at a minimum, having 20 times your income. So when you know that, when we have that financial consult and you know those numbers, then you can start planning ahead of time. Instead of wasting money on things you don't need, we can show you different accounts that you can open so that you can grow your money. And also during that process, you may find out, okay, maybe I want to start a business. I want to do X, Y, and Z. So you'll know what you're working with. So that's the first way that I approach people, by doing the personal financial strategy.
So for this account, what does the account mean, like what is the account name, for example, and how people can open it? Is it does you have Do you do it on banks where they are client on, or is it with your company?
Okay, that's a good question. So there are so many financial portfolios in the United States, right? Um, it's not all suitable for the one person, for the same people. What I can qualify it for or is suitable for me may not necessarily be what you can qualify for is suitable for you, right? So where do we start? First of all, I was talking about the four principles of financial building a strong financial foundation
Foundation.
earlier, right? So then the third one in that is the emergency fund. Okay, before we start, opening any huge investment accounts and stuff like that, I want my clients to start putting something aside for an emergency fund. Where do you normally put your emergency funds? You can put that in the bank, right? Because you want to be able to have access to that money right away, right? So you can put your emergency fund in the bank. You probably won't get as much interest rate as you would in like if you put it in certain investment accounts, but you can either put it in high yield savings account, you can put it in brokerage accounts, and I'll help them, kind of find out, make recommendations on which accounts are out there, so then they can choose the best option for themselves. But the first thing is you want to save money somewhere you have access to for your emergency fund. The idea is the recommendation is to have at least 3 to 6 months of your income. Okay, so while we're working on that, then also based on how much extra that person has every month to save, we'll talk about long-term investment options. Okay, and these long-term investment options could be you putting money in portfolios that are in the stock market, right? Or portfolios that are in cash value attached to insurance policies. So it's different ways that you can do it, but it really depends on the person specifically, right? For people who are working, a lot of time your job has benefits, for retirement that you can invest in as well, like 401ks, 403bs, or things like that. You can contribute to that as well as a match. So for example, your job will say if you put in 6%, will give you 6% match, right? So that also is a way for people to invest. That's an account that they can do. For people who don't have those, they can always open up other accounts that are out there as well. But again, these things are, when it comes to finances, it's not one size fit all. Oh, I can just go in and open this account and put my money. That would work for me. That would work for you. It's different for everybody based on how much you make, where you are, what are your goals for financial planning. That's why I highly recommend that personal financial strategy, so you know exactly, you have a roadmap, right? It's like a GPS for all of us. If I'm going to New York and I don't know where I'm going, I get in a car, I'm going to get lost. I'm just going to keep driving and driving and driving, right? But if I have a financial roadmap, I know exactly what roads to follow. I have a GPS, right? And then that will help me get to my goal. So I think it's extremely important for people to find out what is the best option for them, not just do things because somebody else is doing it, but what is the best option for me when
So
it comes to
after,
opening different
and then
accounts.
after you set up the financial foundation framework with them, what is the next step that you do?
The next step is, again, so you do the emergency fund, then you start talking about investment portfolios, right? These investment portfolios depends on where they are on the financial spectrum, and all my clients are lifelong clients. We're not just working together today and then you go away. So we talk about different options that are suitable for them as far as investments are concerned, to plan for their retirement and different things like that.
Mhm. So when it comes to retirement, what is the best way that people can manage their money? How do you advise them about that?
Yeah. So a lot of time when we talk about retirement, especially for young people, we're like, oh my God, that's such a long time away, right? But money grows over time. So you have to be able to put money aside. There's an example that I always give. If you save $10 a day, and a lot of us will spend $10 a day on things that we don't even remember at the end of the day, right? But if you save $10 a day and you put it in an account that gives you 8%, it would take, in 30 years, you can save up to $500,000 in that account just by saving $10 a day in 30 years. And a lot of people think 30 years is a long time. It's not, right? Time flies by very quickly. So if you start early on, you can really start to save money and then be financially stable during your retirement age. So, how do you plan for your retirement? Really, it's today. You want to be putting aside money a little bit every month, or at least have an account that you contribute to consistently. These accounts, generally, you really don't want to go into them too quickly. Most of the time, These accounts have restrictions, right? Like they are your job 401ks, for example. Those are meant for supplemental retirement accounts. People can open up either IRAs or Roth IRAs for themselves or different types of things like that for retirements, right? They're called individual retirement accounts. People can add more money to their cash value insurance policies. And then that can serve as a supplemental retirement fund as well. But in all of these accounts that I mentioned, they're all meant for long term investment. When you go into them early, you're going to pay penalties, right? So, because of that, you want to set your emergency, work on having your emergency fund, but also make it a discipline to pay yourself first and put it in these accounts. How do you pay yourself first? Ideally, you should save at least 5 to 10% of your income, every month. So let's say, if I get my paycheck at the end of the month, I pay my bills, I put in some money in my emergency fund to build at least 3 to 6 months of my income there in case an emergency happens, right? Then take another 10% and put that towards the future. And this is money that I don't touch. I just let it grow for me. And, so basically that becomes my retirement fund. Um,
Mhm. So I think I should just. There is one question here from the audience. What advice do you have for a student who recently graduate and it with debt and would like to start early and even maybe go back to school for master?
okay. What do they want to start early?
I think in their 20s.
Want to start saving or financial planning early?
Yeah.
Was that the question? Yeah, I would say definitely. When you start early, so the thing is, I touched on it earlier. Compound interest, right? Money grows with you, so your compound interest money doubles after so often. So let's say this 20-year-old or someone in their 20s starts to save $100 or $200 a month towards the future. If this person is getting 8%, so every 9 years that money will double, right? So if you start at 20, by the time you're 40, 50, you're going to have a lot more money than the person who started at 40. So for a student who just started working or who just graduated, is contemplating on going back for a master's, I would ask a couple of things. Number one, does your master's give you return on your investment, right? Because right now it's not just about going back to school and just getting a degree. It's about, is this degree going to serve me, right? Because you don't want to take more debt and go get a degree and then you have a job somewhere that's not even using your degree and you have all the student loans. So before you go back to school, really, does the degree, will it serve me? Having the degree on the wall right now is really not, that's not where the world is going anymore. Yes, you need, so some careers may need higher level of degrees, but make sure that it's going to serve you before you go back and take more student loan debt. Okay. Number two, as you're going back for your degrees, is there something you can do on the side? Maybe get a part-time job so that you can cut back on having to take loans for all of that. And then you can start saving a little bit towards your future as well. Even if you're students, you can save a little bit, $100, $200 every month, and towards the future. You can also see if there is a job that can sponsor you to get your master's, right? So, and that could be free. They may ask you to work for them for some years to pay back what they paid for you, so that you don't have to go back into that student loan. So, to answer the question, if I understand it well, I think yes, you can start
Right.
saving. You could.
How can they pay their loans and also saving an investment for the long term?
Right. So there's a cash flow issue, right? Because you can pay people what you don't have, right? So you have to have a cash flow. Where do you get that cash flow? Do you have a job? Is there a way? Is there someone you can work for, a job, a company that will help you pay off your loans? That way, when you make your paycheck, you can save that, right, towards your future. Also, at the end of the month, look at your budget and try to see how much you want to pay towards your loan, how much you want to pay towards your future. I always tell people, don't pay other people before you pay yourself. Pay yourself first. If I owe student loans, If I pay $50 for student loans, I'm paying myself something as well. I'm not taking everything away from myself and just paying student loans, because guess what? If something happens where I get sick, or I lose my job, I already paid the student loans. That money is not available, right? Who's going to help me take care of what I need to take care of? So you always want to pay yourself first, and then you pay the other people that you owe, and find ways how you can get rid of your student loans. This could be a company that will pay for you, just really doing research, but always at the end of the day, always add something for yourself. Save money for yourself, and then pay other people as well. Don't take everything you have for yourself to pay debt and then you don't have anything, because if an emergency happens, it's really going to be difficult.
Okay, actually, just September marks the Insurance Awareness Month. Can you talk to me briefly about that? What is the Insurance Month mean?
Yes, absolutely. So September is Life Insurance Awareness Month, and if there was ever a time in the world where life insurance was important, it's right now, right? With this COVID-19, where people are dying, so having life insurance is extremely important, and it's the first step of building a strong financial foundation. What is life insurance? Life insurance is your human replacement to your family. Okay. For example, I may be a young person who went to college, I took student loans, and my parents co signed for me, right? If I die, now my parents have to pay that loan. Your life insurance policy can help your parents pay that loan. It's one thing they lost a child, but it's another thing that now that child left debt for them, right? That's one thing. If I'm a mother, which I am, I have three kids, right? And my youngest child is 4. If something happens to me, my income goes away. Life insurance is to replace my income so that things that I'm responsible for could be taken care of, right? So if my income goes away because I die or because I'm sick, that life insurance money will take care of what I need to take care of. I may not have half a million sitting in the bank or a million sitting in the bank, but I can have a policy of that amount that will be given to my family if something happens to me, that I can have access to if I'm sick, to pay my bills, to still continue to take care of my kids, right? So for parents, it's very important that way. For spouses, a marriage couple who have a mortgage and they take care of their home together. If maybe somebody pays the light bills, the whatever, they divide their bills. If you take one income out of that equation, right? If something happens to the husband or the wife and one of the income is gone, the life insurance money is supposed to replace that income. I've seen a lot of families where they have a house, everything is going fine, the husband dies or the wife dies. Then they have to go back to an apartment, right? Because they can no longer afford to have the house. So those are the type of things that life insurance will help take care of. It's basically the human replacement. You cannot replace a human, but you can replace their income, right? To the family. That's why it's very, very important. So important that the government actually dedicated a whole month so that people can be educated on what insurance is. There are different types of life insurance policies. You have term policies and you have permanent policies. The permanent policies, you have whole life, universal life, index universal life, variable universal life. Then there are long insurance policies with the living benefits that you can still use while you're alive, insurance policies with long-term care, so it's very, very important, especially for people who don't have a lot of money to take care of themselves or, leave behind for their families to be taken care of. It's the first step of building a strong financial foundation. Even before we start talking about investing money in the market and buying homes and building, doing all these big investments, the very first step foundation is getting proper protection. Because, I can go to bed today and not wake up, right? We don't know what God has in store for us, right? So you want to make sure that foundation is good, then you venture out to do other things as well. But that foundation, if that's not good, that's what creates a lot of stress and a lot of problems that we see, that I deal with on the medical side, right? And that's why I'm so passionate about educating people about financial education and building a strong financial foundation. Because for people who don't build a strong financial foundation, when something happens, That's what I deal with at the hospital, with all the other healthcare complications that come with that.
Mhm. So, do you think that there will be more financial campaigns and awareness raising, especially for the younger generations who are coming?
Yeah, we're definitely trying. I myself is a part of a national financial literacy campaign, and this campaign includes financial workshops, that we do for free, and the workshops are, basically teaching people about wealth management. What is out there? What are the type of financial portfolios that are out there? If you see, I didn't really go into details about everything that is out there because there are so many of them, right? So you come into these workshops, you get to learn basic financial concepts, like the compound interest that I talked about, building a strong financial foundation, building wealth. What is wealth? There's actually a wealth formula. I was talking to a colleague of mine, and he's like, how can you win a game if you don't know the rules? Right? How can we win the wealth building game if we don't even know the rules? There's a wealth formula. To calculate your wealth, you have to take time plus your money, plus or minus the rate of, so your money, time, plus or minus the rate of return, the interest rate they're giving you, minus inflation, minus taxes. So people, that's how you know how much wealth you have or you're going to have. People get a chance to understand these things. What is inflation? What are taxes? How does taxes affect me? What are different accounts, that can affect me? What is the stock market? What is a mutual fund? What is, dollar cost averaging? So those are things that you really, once you know the foundation, the basics, then you can build your financial foundation based on that. You can't just go on Google and try to figure out, or your co-worker, you're talking to your friend, oh yeah, this is what I'm doing, I'm gonna go and do that. That's not how it works, right? Because what he's doing or his life structure may be different from your life structure. So those campaigns are out here. I'm part of one, and I know that we are doing amazing things. Our workshops are being taught at Harvard University, Columbia, have been taught at Harvard University, Columbia University, at many colleges, many churches, many community organizations. We go out, educate people, invite people to our workshops. Now with COVID-19, everything is on Zoom, which is great. And our workshops are actually now daily. So every day you can log into Zoom and learn about all these things that I'm talking about, learn about insurance products, learn about investment products, college saving products, college coaching companies that are out there, estate planning, because that's another thing too. It's not, excuse me, just enough to have wealth, not enough to have all these things set up. If you don't protect them, then your family is not going to get it the way you wanted them to get it, right? So then you have to get a will, get a trust, and advance directives, different things, that power of attorney to protect your wealth as well. So there's a lot that goes into finances that people need to take time out for. I think it's time that is well spent to really educate yourself, because it's a very important to understand everything about, you can understand about finances. You don't have to be an expert, but you can learn the basics. That would be very helpful.
So, how people can reach out to you or learn about these campaigns? And is
Yeah,
it you only working in Maryland?
no, no, not at all. So our campaign is it's actually international, right? It's in all 50 states of the United States, but also in Canada. So anybody in Canada and all 50 states. And now we're on Zoom, like I said. So, you can, once you reach out to me, you'll get a link to log into our Zoom workshops. I'll register you for them. I'm on Facebook as Nany Condoe. My phone number is 301 301-275-7274. And you can put my email up also if you want, in the chat box, or I'll make sure you have all my information. But yeah, people can follow me on Facebook, on Instagram. I actually created a company that I do a lot of education through, and it's called Health and Wealth with Nany. And the health part obviously comes from my background in the healthcare field, where I'm passionate about educating people, about preventative healthcare stuff. Don't wait until now you have full blown diabetes or your blood pressure is so high before you get help. You should at least check yourself every year. Go to annual doctor visits so that you can see what's going on. So I educate people a lot about that. If you have a headache or you don't feel well, don't just go lay down or take a nap or say, "Oh, I'm okay. I'm gonna be fine. I'm okay." And then months later, you go find out there's something wrong with you, right? So I do a lot of health education, preventative healthcare stuff with that. Then also guide people to getting the right primary care doctors, finding the primary care doctors, and uh, different specialists, different things that they need. Help them guide in the right way so they can take care of their health. And then on the wealth part, same what we're talking about. Doing those personal financial strategies, seeing where people are, making recommendations on different protections and different ways that they can really build a strong financial foundation. What accounts are available that are suitable for them so that they can start saving and start building towards the future. So I do that through my company, Health and Wealth with Nany, and I just love it. Before COVID, we used to do monthly workshops, and it was health and wealth seminars where I had other financial professionals come with me, or other people in the healthcare field, like doctors that I work with, PAs that I work with, come in and educate people about health issues and financial issues, because we need to learn about these things and plan accordingly. We really have to plan for the future, and not just live for today, but think about long term. Prepare for today, but also think about long term as well.
Do you have a plan in your future to go back to the continent and start maybe a financial educational school or systems, like build this system up in the institution?
Absolutely. Absolutely. I'm actually currently a part of a movement where we are trying to encourage entrepreneurship. I'm from Guinea, so we're starting Guinea, but the goal is to really make this international in all the other parts of the continent. Educating financial education is at the foundation of everything we do. So even when you teach people how to become entrepreneurs, if you don't teach them the importance of what to do with the money, how to build wealth, they're going to struggle in their goals of becoming entrepreneurs, right? So my goal is to duplicate what I'm doing now here with the financial workshops, and helping people with different financial products to help them with the future. My goal is to duplicate that definitely on the continent. And I'm starting with Guinea, working with movement right now, and we're in the very early stages of this, where we're finding ways to really bring financial education to the continent, and also understanding, the United States is different, right? There's many regulations when it comes to where you put your money and how the interest rate works and stuff like that. Understanding those regulations back home or in the continent, on the continent of Africa, just so that make sure people's monies are protected and they have where they can put the money and let it grow for them. But I think the foundation of it is the education. So I'm definitely working on that to bring it back to the continent.
So some of the your participation, you participate in some of the events, and you just give some of the donation and the amazing humanitarian work that you are doing beside. How is that helping the upcoming generation? For you are doing it for those younger people and people who are in need also.
Yeah, absolutely. Thank you. That's a great question. So I believe that, to whom much is given, much is expected. So and also you have to give. Even if you look at your financial planning, when you plan your finances in the future, 10% of what you owe should go into donations. People who are religious give it into tithing, either at church or at mosque, as sadaka or different things like that. But you should give. I believe that when you give, you get. You know, and I just, there are things that are very dear to my heart. A lot of people that are doing amazing things that I like to support. And I think, how is that affecting the younger generation? I see it with my kids, right? My kids always see me doing something. I'm either volunteering somewhere or I'm donating somewhere, and I can see that in them. We talk about it at home, and my daughter's just turned 7 and she wanted to donate her birthday for a charity. So all the monies that she had, she wanted to donate to a charity. I think if we raise a generation like that, the world is going to be a better place, right? You don't have to be rich to give. No matter where you are in life right now, know that you are doing better than somebody else, in life. At least you have a roof over your head. You have food. You don't have certain things that somebody else is dealing with. So if you can help someone, I'm a strong advocate of that. I don't believe you should give what you don't have. If you're already struggling, then obviously don't deprive yourself everything and give, because then that doesn't make sense. But if you can spare your time, donations could be just mentoring someone, you know being kind to someone, just complimenting, doing things to make the world a better place. So I definitely encourage the younger generation, if you could donate money, donate. It makes you feel good as well. Giving is not necessarily for the person that you're giving it to, but for yourself. You can look at yourself in the mirror and feel good about who you are and what you're doing. And I feel that also adds to your self-esteem, and it motivates you to do well in life, because you want to gain more, you want to have more so you can give more.
So people right now are asking, with all this amazing work you are doing and you are spending much of your time outside, how do you manage your time with your family and your kids and relatives?
Yes, that's a great question as well. So I have 3 kids. I have a son who's older, and then I have 2 younger kids, 7 and 4. A lot of the things that I do, my kids are actually with me. Sometimes when I think, I don't know if you've met my kids before
Mhm.
in some of the activities that I do. So when I have workshops and stuff
Absolutely.
like that, exactly, my kids are with me. I'm blessed to have a lot of family support. I have a full-time nanny who's at home with us and helps me take care of my kids. I also have a lot of strong family support. So, but my kids are pretty much with me most of the time. They may not be out there, you see them with me, but for the most part, they're with me. And it's a balance, right? It was not easy. It didn't all become easy now. It took me some time to balance working at the hospital, doing all the great things that I'm doing, and balancing being a mom and taking care of my kids. But we are getting to that balance because I've created flexibility. Okay. Nowadays, even though I'm out doing a lot of things, but I'm in control of the time. So if I control the time, then I can control where I take my kids with me, or, the time that I spend with them. So I think so far we've found a good balance to where, the kids enjoy it as well. My kids started asking me about, Mommy, what is investment? What is insurance? Mommy, do you have a workshop? So they're lingo, they're picking
Mhm.
up, they're watching me. So they're picking up the things that I'm doing. And, they're happy that we always try to make it fun. So they look forward actually to my workshops, and because they know they'll have fun, they'll have candy and stuff like that. So,
Okay. I
yeah.
think we reached the end of our conversation. Thank you, Nany.
All right. Thank you very much. And I hope this was helpful. It's a great
Yeah.
pleasure being on your platform. And I'm very proud of you for what you're doing. And thank you
Thank
very
you.
much for having me.
Thank you. Yeah, actually, it was great, and we have a lot of interaction from the audience, and people are saying the topic is great. Yeah. Thank you for your time.
All
Keep
right.
doing the work,
Thank you.
the good job for the community. Thank you.
Thank you very much. I
Have a good
appreciate
day.
you.
Okay. Bye. So, thank you, everyone. We reached the end of our program today for the Four Direction. Our topic was the financial literacy challenges and opportunities, and I was joined by Nany Condoe. She is a financial professional and a physician assistant as well. Uh, until I meet you again to the next show on a different topic, stay well. Thank you. Bye.